Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Oh my gosh, guys. You know what? I was just not ready. We could go back and do it again if you want. No, we'll just do it this way. First, let's start the music here. Oh, and I don't have the lights on either. You know what happened? I was just so anxious to get, that we were starting at 6:30. Not that it matters. Not a whole lot happened today. But I kind of rushed a few things. Hold on a second. All right. There we go. All right. Do the charts. All right. So this is Christmas week. It's going to be pretty quiet. There is like new home sales today and everything. Like I do think people are working. So while there's an extremely reduced chance of anything happening today, there could still be some action. Then you got New Year's. Not New Year's. Christmas Eve. Christmas Eve is kind of like usually nothing, but I can think of a few times when it's done something. But then after that, it just goes dead. It just goes dead. Don't trade between Christmas and New Year's. Granted. Well, let's see here. So coming to the S&P 500. Oh my gosh, I thought I fixed all this. That's so annoying. Did not save. Okay, there we go. We had a decent recovery the other day, but not completely washing out this disaster from the 18th on the Fed day. But not a whole lot overnight. I'm worried that the sell-off could continue and then you would get a lot of volatility over the holiday break. Right? Oil kind of middle of the road. Gold and silver. Well, gold, that's a decent bounce. Yeah, that's a good bounce right there. HG, copper, still down there. 6J, meh. Okay, I mean, a bit of a bounce, but it's mirroring the treasuries pretty closely right now and not looking very good. And the Bitcoin's still down there at 95. Not a whole lot of a change over the weekend on that one. We gotta come over here to the daily charts on a few of these, I think. Don't want those markers on those charts. I'll make sure that this workspace gets saved like that, okay? ZN on the daily. Jeez. So they did try to get back above that on Friday, and so far that's kind of acting as resistance there at 109.03ish. So keep an eye on that if we do get a long flow. The moment though, they're kind of slowly sliding down. So I'm noticing here on YouTube, and chat's still being kind of weird on the web interface, but it works over here. Good morning, Amir. Yes, slowly down. I'm getting this. I see this new button. What's this new button? Plus goal. Set a goal to engage your audience in a new way. Once you reach your goal, celebrate with your community. Pick a goal. 10 super chats. Oh, okay. We can set the number of super chats that we want. And choose the super chat colors that count. All the colors. Set a timer, 30 minutes, how you'll celebrate. You know what? I'm not so into that. Okay. So anyways, on Friday, we were working a little bit on an algorithm. We had a couple more ideas and things that I wanted to try with that. So if it's okay with you guys, I would like to mess with that a little bit here. So we're going to come in and we're going to make another version of it. There we go. We're going to make Degenerate Gambler 4. Okay, and this 4 and 4. Okay. So, the idea was that the when you're doing a 4-year series, that it's going to work better one direction than the other. And so you should have 2 of them, one for long and one for short. So that's what we're going to do. And so we're going to create the 2 versions of the indicator. We're going to come in here to the Fourier period. Where is it? Fourier period. And we're going to make a bit of that. Okay, and then we're going to come to here. Short as Fourier period short. And then we do this cross above for it long. And we do this cross above it for short. Oh, my for underscore Fourier long. Underscore Fourier short. I'm going to set the bell to 20 there. 2 other. Oh, right. I don't know if you actually want to do this bit here, but let's just leave it the same for now. Beginner Gambler 4. Save history false. Where'd it go? Let's go to from 10 to 200 by 5s. Fine. That's probably all fine. Let's just optimize over this year. Yes, include commissions. Let's add slippage. Let's maximize max net profit. Oh, and we need beacon instruments. Yes. You know what? It's too many. So let's go by 10s. $400, and it's much more reasonable. You know what's something that just absolutely drives me nuts is Facebook adding chat to groups and all of the idiot, and it gives all these options to like recommend channels and like drag people into channels and stuff, and it's like, no, I don't want to participate in Facebook chat. Stop bothering me with that. Rhythmic versus DX feed, MBO data. First picture is rhythmic and the second is DX feed. Why so different? I bet I know why. Oh, this one's bad. That one's messed up. That's the volume profile is messed up. Like, I could understand your footprint charts being different, but the volume profiles being different, that's a weird one. What platform is that? It looks like TradingView to me, but I can't be sure. Guess not. So if this comes back to me and says 10 and 10, I'm going to be a little pissed. Goes and does 400 iterations, and the one that it picks is the one that's, you know, the shortest period and trades the most. Hey D, good morning. By the way, a little torn on whether we should stream tomorrow or not. I don't think we usually do on Christmas Eve, but I'll be up either way. But like maybe I just use tomorrow to like write and or record videos. Okay. Well, that's already giving me a result that seems extremely different. Sharp ratio of 0.77, and here's one where the sharp ratio is 0.92. And what parameters is it giving me? Fourier long, Fourier period short when 80 move, and Fourier period long 20. Oh. Oh, I see what's going on here. What's the difference between these, by the way? $1,000. This one's way better. This one's way better. That honestly, that result is almost as bad as the result that I was worried we were gonna get. So what I was worried is, so it has this, well, let's turn it on over here. We don't have it turned on yet today. We need to remember to keep that. Let's keep him a degenerate gambler 1 for now. Enabled. Okay. All right, so it adds this Fourier data series, right? And when that crosses the 0 line, that's when it decides to take trades. And now, this could be good at determining when the kind of the ebb and flow of the market is, but it could also just be random. I do kind of wonder if it's just like it's random enough that it gives you a good kind of distribution, because it really seems to me like it likes to go long, you know? It likes to go long. So what has happened is the shorter the period is, the more trades it will take. And so what it has done is, because the S&P 500 tends to be up most of the time, it is optimized towards trading the short one as often as possible, and trading the long one as often as possible, and the short one as rarely as often is what it looks like it's doing to me. So I think this is curve fitted. But we have ways to double check that. First of all, we come back over here and turn on the history so that we can come in here and look at how it, well, that looks awfully good. Wow. Wow. Okay. Like, even the max drawdown's not that bad. Let's represent it in currency. $8,000. That's actually really good. Like, this is saying it would take several months, but this would pass a funded trader program. Ross Gerald, happy holidays. Thank you. Okay, but that's only 1 year of data. So now we test it over 5-year time period and see if those results hold up. What's this link you got here, D? Short squeeze alert. Oh, that's interesting. Oh, that's great. You know what? I think I'm going to bookmark that one. So it's basically, it's coming in here. You can see what's the most shorter than not. And then it also gives you on a daily basis the amount of short interest out there on that instrument. That's pretty cool. Yeah. And the shorts definitely hit a high there during the 19th, on TLT at least. I'm actually surprised that it wasn't higher before that, because it sure seems to me like ever since the beginning of November that the shorts have been trying really hard, you know? Okay. So I still believe that these results are curve fitted. But when I say curve fitted, it's not so much, well, I guess it is kind of like basically I'm going in and finding the, well, no, I don't think it is kind of the case. So like the two parameters that we're changing here is the Fourier period long and the Fourier period short, and doing an optimization on it. And what we just did was we optimized it on 1 year, and then we ran it on 5 years, and the results over 5 years are pretty good. It's not a 0.92 Sharpe ratio, but it's pretty good. Okay. It seems to me that the reason it picked those numbers were that it wants to trade long as often as possible and short as rarely as possible. And that's why it picked those numbers, probably. So what that means is that it's kind of curve fitting to kind of like the tendency of that instrument. So I think that could be a reason that it continues to work that way. Like, by and large, equity indexes tend to go up more than they go down, right? It did really well during this COVID period, actually. So this might actually be worth us playing around with. For a Sharpe ratio of spot 3, I don't think I can necessarily start a fund with that. But I do think with our drawdowns, well, okay, so in order to trade this on like a micro contract, the max drawdown has to stay below 20K, right? Divided by 10. So there is 1 to 3 periods where it would have failed, where it would have broken the drawdown. But that's not that bad. I don't think you could ever expect something to always stay in the combine forever, just because the combine rules are just that crazy and dumb. But whatever. You could maybe trade this. That is pretty wild. I don't remember what the difference between these two bits are. I think that this and this are the same, except for that they have different targets when we're in reversion mode. Okay, the results of that are so good that the other tests that I want to do, I think that I need to create a new, I think I need to just make Degenerate Gambler version 5. Okay. 5 and 5. Okay. And what I want to do for this one is I want something that doesn't have stops and targets, that just has entries or exits, essentially. So I'm going to copy this bit right here out. get rid of the rest of this. Okay, leave some of the other general risk management things intact, though. This bit right here, the filter is rising, and the market position bit, that's what prevents it from doing stop and reverse. So, and then we don't need to set stops and targets. At some point, we might set a maximum stop. What's the scope of today's work? Well, so we have been trying to create a algorithm that is not necessarily a profitable algorithm or an algorithm that I can recommend that you trade with your own account, but it is an algorithm that would work long enough to possibly pass a combine with, or and I would, if I can get it to, I would really like to have something that works well enough on a combine that like it would cause the funded trader programs some trouble. So that's kind of what we're doing. And so what we have done is we have created something that uses the cycles of the market and mostly trades ES, right? And it kind of takes advantage of the properties of ES, I guess you could say. So we'll have to forward test it now, but we've gotten some interesting results. This result here, that's one of the better back tests that I've seen on something that is purely price based. So that's interesting, even if it's just ES. I'm sure that if we went and we did it on a different instrument, right? Like if I came over and did CN, the chances of it still being profitable on ZN are probably nil. I'll be so shocked if this is profitable, because I think that it's curve fitting to the instrument itself. Could be wrong though. Let's see. All right, but anyways, so the change that we just made was that we set a cycle for the long and a cycle for the shorts. But now what I would like to do is I would like to have something that is always in the market and is just like entries or exits, or what some people will call stop and reverse. So like, you know, it enters in, it stays in until it gets an opposite signal, right? Oh yeah, see, it's terrible in the treasury, although it has its moments. Oh, that's so interesting. But you know why that probably is that again, it trades longs as frequently as possible and shorts as infrequently as possible. So it might even be the case if you come in here, yeah, that there is, it made some money on the shorts and not on the longs. So this is just reflecting that instrument mostly moved down during that time period, is what this is saying. So if you do it on ES, you know, as long as ES is in a general uptrend, it's okay, I guess. Okay. Anyways, so this right here, we're gonna save this. We're gonna go back to this optimizer, but we're gonna go to Gambler 5. I'm sure they were doing the commissions and slippage again. 1 year, yes. And we're going to try the same thing that we just did there, where we go from 20 to 200 by tens. And let's see if it's able to work something out with that. Meanwhile, I think over here on this guy, let's remove version 1 and put version 4 on there. I'll remove version 1 and we'll put version 4. And what was it? It was like 20 and 180 or something like that, right? I'm just going to use my memory for now. Since Ninja Trader's going to be a little bit slow while we're back testing this up. We're going to have to enable it. Really curious to see if this one was able to pull something out with a profit or not. Biden commutes sentences of dozens on death row. Biden has done so many commutions at the end of his term. I'm kind of wondering if it will change the way that like that's used, you know? Some of them, it kind of looks like he didn't really look at the case. They were just like, okay, all of the instances like this, we're gonna commute their sentences. And some of them were people that really deserved it. It's always controversy at the end of a president's term, but like, I feel like it's been particularly bad here with Biden. Still not to the level that it reaches the public conscience, but the collective public's consciousness. Rumble shares erupt after $775 million tether. Oh, I forgot that they were a stock. Should we go take a look at them? Your festive recap awaits. Rumble. I think that you want this one. The other one is a warrant. Okay. So it is at $10.33. $10.33 right now. That is a good maybe 25% jump. Let's go back to the daily chart though. They were at that price in 2023. So I don't know if that's necessarily a good reason or place to get in. Let's see here. Ross, hope you have a good one. Don't mean to interrupt. Dude, that's what we're here for. I always think it's funny when you guys are like, One of the things that drives me crazy the most is when people are like, "Hey, is it okay if I ask a question?" Well, not now. You gotta lead with the question, because the whole reason, the whole thing I'm here for, like the thing that drives this stream, is helping new people. So let's see here. What does they say? January I'll be with family. February I will be in Seychelles. I don't know where that is. A month, and then plan to recharge and learn a few hours. Oh yeah. You know what? To me, vacation is always like cool opportunity to do more research, you know? I have gotten so at first I was like, I don't feel like I'm getting that much done here during this period of unemployment. But when I went back and looked at my lists and everything, like the amount of changes in code that I wrote to my indicators is pretty tremendous actually. Like I've made some significant changes, and yeah. Now, it's not as much as I would like because I spend about half of the time watching the kids while my wife works. And not really anything that I can do about that. But what would I be doing with that extra time? Well, I think I would be caught up with videos. I think that I would maybe have more videos ready and in the pipeline already. And I would probably make more like shorts and things that are like specific to that day. I don't know if that would really help the channel a whole lot. And then I think I would probably spend more time reading and doing research. Although lately I have been reading about oh wow. Okay. I've been reading about Rust. Okay, so it did find something, huh? Oh no. Oh, okay, I see. So it didn't find one that was profitable. I was just looking at that gross profit number though, and I was like, holy crap. Holy crap. Okay, so how bad is it? Oh yeah, sorry, I have to do it in a new tab because save history is off. Right? So we have to load it, let it do its back test. I wish that when you created a new tab that it didn't run right away so that I can change a little bit about it. And then... Oh, hold the boat. So it's doing a 1.35% win-loss ratio. And so 1.35, and it's getting 40% win rate. Is that bad enough that I can just flip it? Okay. That is also interesting. Seems to lose a lot on the short trades. What parameters did it pick though? 170 and 200. So that did kind of what I was thinking it would do. $170 and 200. So here's what I'm gonna come and do now. Was lung was 170, right? Yeah, okay. 170 and 200. Just save those defaults. We're gonna come back to here. Change it to the default. And then we're going to change the threshold. We're going to go from -10 to 10 incrementing by 1. Oops, and 10, not 100. Wait, is that right? Yeah. Yeah, 400. Because it's 20 times 20. Market's super, super quiet so far. I can see the Zero Hedge is picking up that story about a migrant setting a woman on fire in a New York City subway car. Don't look it up. It's horrific. Oh, Michael Saylor was tweeting today. MicroStrategy has acquired 5,262 Bitcoin at $106,000 per coin. And has achieved a Bitcoin yield of 47.4 QTD and 73.7 year to date. Continuing to buy it. Like the thing that's funny to me about the MicroStrategy thing is that, like, right now it's totally working for sure. No doubt, it's totally working for him. It kind of seems like an infinite money glitch. But what this is doing is it is ramping up the risk and the leverage every time. Eventually, you will get to a point where even a mild decline in Bitcoin is enough to completely screw them over. I really think that, you know, I don't have the exact math on this, because like the whole thing is we have this one study where they look at, like, with options, and they find that there is a situation where it's pretty much guaranteed to go. It's guaranteed to blow up because you don't factor in the impact of your own trades on it, right? Granted, the whole strategy with MicroStrategy is to never sell, but every time that they buy it up here at the highs, that just raises their like break-even level, right? So I wouldn't be surprised if there's some math on that kind of shows situation where it will go bust. And he's just so cavalier about it. Yeah. Last month, the average was only around 40,000. See, he could have just left it alone at that point. And I think that they'd probably continue to make money. But as long as you keep buying into it, you're just adding more risk to the pile. It doesn't matter to him. He's already cashed out $1 billion of personal wealth and stocks from the company, and he has this personal stack of Bitcoin he can sell when he bumps. When Bitcoin inevitably crashes and takes the company with it, he is not personally liable for any of it. I don't know about that one. I would like to think sometimes, but I don't. But I would like to think that if it went that south for him, that regulators would step in and start doing something, you know? I feel like that this particular run is taking a lot longer. It seems like it's okay. Let's check our memory usage. Like, it's still trucking along. Well, we are using a decent amount of memory, though. 11K. When it's like up to like 14K, that's when it seems to like slow down from the memory usage. But right now, it seems like that each iteration is taking about the same amount of time, and it's just slowly going. They'll step in when they want what he has, usually the way it rolls. Yeah. You know what it comes down to, though, right, is that, again, there's this assumption that markets are efficient, right? So if the market is doing something, a lot of regulators kind of have this opinion of like, well, we've never seen this before. Who are we to say that this is good or bad? You know, let's not stifle innovation, etc., etc., etc. And then it's not until something goes wrong that then they're like, oh, we've got to do our job and protect the public, or we won't have jobs anymore. That's totally the way it is. I was watching Simon Sinek, I think, the other day, and he was going all in on this whole, like, the problem with our society is Milton Friedman and Jack Welch, or who was the CEO of GE. Yeah, anyways, like, I think that they're right that this shift that we've seen in corporate America since the 80s is objectively bad for society. But I think that they're wrong to say that that Milton Friedman was completely wrong about his thing. So Milton Friedman basically said that companies have a moral obligation to make as much money as possible. And this is built partially on the assumption that, like, if the markets are efficient, then whatever you do that helps the stock price, that helps society at large. Okay, that part is false. That part is false. But the part that I think is true is, you know, if I have a company and I decide to run it one way that doesn't make as much money, and somebody else runs it a different way that makes a ton more money, then the market will allocate all of their capital to that thing that is making the money. And so this whole thing with, like, Jack Welch is kind of like, well, once the cat is out of the bag, once Pandora's box is opened, you can't really stop it. Because if I come in and I say, well, I'm not going to do layoffs in a period when, you know, to kind of amp up my quarterly profits or whatever, okay, fine. Then investors won't invest in you, and the companies that are doing it will go up. And then you just end up with all of the worst companies are the ones that are having the money allocated to them, right? A key point of what Milton Friedman said was that a company is supposed to maximize their profit within the bounds of the law. So, in my opinion, the thing that has really failed us over the last 30 years or so is the regulators. They are not proactive in their job in seeing things that companies are doing that are harmful to the public and society. And, you know, in some of these cases, it's the regulators should see what's going on and then tell Congress, you know what, there should be a law like this. Like, I think that there should be laws restricting how CEOs get paid. Like, I think that if a CEO, anytime that a CEO gets paid in shares, that those shares should have to be vested for at least 5 years before they can cash out on them in any way, shape, or form. So that they can't just, juice the stock at one point, get their money, and then leave it high and dry. It's just crazy. Maybe even more than 5 years. Or maybe like, I don't know. There could be all different ways of doing it. This is where you'd have to see, like, let researchers do some math and some modeling on this stuff to kind of see what would actually make the most sense. But it comes down to the deeper problem here is the assumption that markets are perfectly efficient. They're not. They're not. So you can't just look at the decisions that the market has made and always assume that that's the best decision. We have to understand that the markets are going to do things that are bad for the society, and we have to account for that and deal with that within our system. And you cannot rely on or assume that the CEOs and board members who have a vested interest in not doing the right thing, you can't rely on them to do it. It's challenging to effectively monitor and enforce rules for multinational companies. Well, but I think that there's lots of rules that are there that are available that could change. I think that the most obvious one to me is that companies should not be able to buy back shares, in my opinion. I think that it just creates too much of a conflict of interest and opportunity for companies to abuse the market. And there are some companies out there that just straight up add debt to themselves and then buy their own shares. And so you have like these completely worthless zombie companies running around performing pretty well in the market, even though they're not creating any value. So I think that that's something we should go back on. And again, I'd like to see more studies and research around that area. So like that's one obvious one. I think that the mark-to-market rules should be changed. The amount of credit that you get is based on like the mark-to-market of the assets that you hold. I don't think that that's correct. I think that valuation should factor in the impact of your execution on selling it. Otherwise, you create this situation that is guaranteed to blow up, and we're seeing that happen in the options market all the time. Yeah, they would argue it's part of their strategy for long-term to buy back their own shares. Well, and the whole thing is like they buy back their own shares when they think that they're undervalued, and they sell their own shares when they think they're overvalued. That would be all fine and dandy if everybody used it that way. But it just seems like it's something there's too much opportunity for abuse, right? Maybe there should be better rules around how companies treat employees. Like maybe there should be requirements about having. Oh man, the S&P 500 is really taking off, by the way. Maybe there should be a requirement that like you need a board seat or a certain number of board seats given to regular employees of the company. Things like that. It brings me back to this whole thing about DEI. The thing that drives me nuts about DEI is that from everything that I've seen, it actually reinforces existing systems of power. What it essentially does is it says, okay, we're the rich people that have all of the money, and we're going to make this decision for everybody else. And if you don't like it, too bad. And then you're going to put all of these people into positions of power just under them that don't really have the ability to change anything. But, or the thing that Democrats always want to do is, oh, well, there's people that are rich. What we need to do is we need to take their wealth by taxing it, and then we can redistribute it to everybody through government services. No. Like, if your objective is to tear down the existing systems of power, that doesn't take Elon Musk out of power. Quite frankly, it just kind of keeps him in power and just placates people. No, you have to go to the inefficiencies in the system that are allowing them to make so much money in the first place, and even the playing field. And yes, I do think that in some instances that should mean that there should be handicaps. Like, I would like to see something in the markets where if you're a beginning trader, you get a better queue position or something like that, right? Like give the small players advantages that the big players don't get, essentially. Okay, so that's kind of what I thought might happen. So my theory was that because it was, whether it was long or short, that the cross of zero was maybe not the right thing. And so it's saying on the FT threshold that it's going for a 9. But it's going for a 9 because less trades that way. So I don't like that, to be honest with you. It gives like crazy good results that way though. But let's come into a new tab and all that. Still makes way more on longs than shorts, but at least this one you get both longs and shorts are profitable. Now let's go to 2019, see if it survives. This might not survive. Okay. Oh, that's interesting. So it is profitable over 5 years, but it's only just as profitable over 5 years as it was over the 1 year. So that means that we got some. Oh my. Oh my. Okay. I tell you what, I have never seen a performance like that. It looks like the chart of the Fourier series itself, right? Like it's going back and forth. That is so wild. Oops, wrong button. We're gonna draw it a little bit better. That is so fascinating, frankly. It's fascinating. What changed? So there's a question of if we can find an easy filter for why it does this. So it is exactly in October of 2022 where it stops working for a while. Yeah. Okay, this period right here. And then when does it start working again? The beginning of 2024. Yeah. I see. So probably what's happening. Probably what's happening here. Yeah. Is you get some that just go really, really, really far. Yeah. Because it's a stop and reverse sort of a thing. Yeah. So I'm going to say it's not really working. Let's come back to this editor and just make some notes. Did I close it? I had forgotten. There's one other thing that when it's like that, there's one other thing that we could potentially try. Let's pull that back up. Do the optimization. Threshold between 10 and 10. Let's shift that to be between 5 and 5. -5 and 5. And then do it as a walk forward optimization instead. Go way back. Try that. Per The Economist, by the age of 35, master's graduates earn no more than those with just a bachelor's after accounting for their better off backgrounds and higher previous attainment, per The Economist. I would like to see that across industries, because there's going to be some industries where a master's like really matters and some where it doesn't. Classic Chop City on ES. Well, there was a really good trend first, but then yeah, since the open, it's basically been Chop City. Donald Trump says buying Greenland is an absolute necessity. I'm all in favor of buying Greenland, but I don't know if they want to be a part of us. This whole thing, like, we should buy Dude, I've seen some stuff with Canada where it's like, if Alberta just votes to cede, there's nothing they can do about it. Don't think that will happen, though. A 2022 Hudson Institute study estimated that a quantum hack of Bitcoin would cause more than $3 trillion in losses across crypto and other markets and trigger a deep recession. Berman said the likely costs of quantum hack have swelled since the study came out, as Bitcoin has climbed to near 100,000 and grown into an increasingly mainstream investment asset. I'm not so convinced that there's enough contagion with it that like the entire financial system would collapse and that we would run into a general recession. But I do think that a quote unquote quantum hack would be bad news. I do. Okay, that's not very good. Tell you what, it has some periods where it worked really well. Look, there was one period where it says the Sharpe ratio was 1.9, but that's only 8 trades during that period. It's a net loser, though. So I think back to the drawing board for that one. I would like to get a strategy that is like, well, you could. Well, okay, there's one other thing we can put in is that you can put in like stops and targets, right? Let's go back to a standard optimization. Oh, are we not testing that correctly? I'm just going to come in here and I'm going to have the targets be really small. Or, well, I'm going to have them be 0.2. So that should only be like 100 iterations or something like that. Come on now. Why are you being so slow? There we go. If you backtest Monday far enough, it's a problematic day or save the week historically. Yeah, well, so I have an indicator called the range histogram. And if you are if you're a licensed member, that is, you go to speculatorset.com and you pay the $100, soon to be $200, for a lifetime license, then you can use the more advanced version of the range histogram that allows you to filter by the day of the week. And you can see very clearly that Mondays do not have as wide of a distribution of range as other days of the week do. And you can also, get it to do a histogram of other indicators if you want to try doing that. So, look in Discord. Tennessee in a little. Well, I don't know. What you're seeing there is probably just mirroring what's happening in the treasuries overall. I don't know if that's necessarily an edge for us there. I was a little curious though. $200 for what? 4-hour indicator suite. So let me show you what comes in it. So much comes in it. It's getting big. I should really be charging more than $200 for it, but they have a verified track record. So you can come back and look at my results. I would say that for the most part over the last 2 years that we're break even, that we'll have periods where we do really well and then there'll be a market that I don't understand very well and we'll lose it. And the indicators are not a strategy. You have to understand that. The indicators are not a strategy. The indicators allow you to see and record data that you can't otherwise get. So it's up to you. Will it make you profitable? Probably not. There's no indicator can make you profitable. See, this is the problem with selling this shit, is that people just want, okay, well, if I give this to you and then you're going to make X amount. Listen, if I could give you something and I was for sure, that there was a specific edge that I'm giving you that'll make money from it, I'm going to charge you a hell of a lot more than $200. Okay. I'm giving you the tool that allows you to do the analysis, but it's allowing you to do real analysis on things that we do know there are inefficiencies in. Okay. We know that there are inefficiencies in order flow. They're well proven. And can you find more stuff out there? I think absolutely. If you have the right tools and the data analysis and stuff, and that's what these tools allow you to do. They also give you a couple of things that I would say they're not necessarily going to give you an edge or make money, but I really don't see how people make money without them. How are you trading without knowing what the value of your currency is? That one just weirds me out. All of you guys that are trading out there without looking at the currencies at all, and we have a dollar index, I think that's the best way to look at it. Well, if you don't use NinjaTrader, then don't do it. But I would take issue with you calling them technical analysis, because they're not technical analysis by and large. The only indicator in the suite that I would consider technical analysis is my ATR. And that's in there because we have substantial backtesting to show that the daily ATR is a good way to judge where you should put your stops and targets and so forth. But it depends, what is your definition of technical analysis, right? To me, technical analysis is the study of a single time price series. And if it's from within that context, the only indicator in my suite that is like that is the ATR one. Pretty much everything. I take that back. You could maybe say that for Alice too. Alice incorporates volume, but okay. But all of the other ones are either about multiple data series or about bringing in data from order flow. So they are not technical analysis. Okay. I think that that's kind of like a misnomer that's created by these price action traders that claim that technical analysis is indicators, and deny that what they do is really more classically technical analysis than. Now, this strategy that we're building is totally technical analysis, which is kind of why I don't expect it to work necessarily. Gary Norton says everything doesn't work except for that he does, which is 2-second trades. Well, okay, so he's doing market making. And can you make money market making? Maybe. It's hard. Okay, work something out. That was actually way better, but that's because it's taking stops and targets, right? That's in line with some of our other tests. Much more than... Oh, I don't know about that. Okay, like... Here's the issue that I think you have. Is that you're probably more likely to find success simply by being lucky than you are to find success from having an edge. Like some of the edges that are available to us as retail traders still depend very heavily on you as a person and the resources that are available to you and everything. And so if I have a way of trading, like say market making, and I teach 100 people how to do market making, I'm going to bet that 70% of them are still going to fail, even if there's a real measurable edge in that thing, right? Like the question that you guys were asking earlier about, like, will it make me profitable? Is, I mean, I hope you're joking about that, right? Because you realize that because of the competitive, that's like saying, if I'm selling you basketballs and you say, will this basketball get me into the NBA? It's absolutely ridiculous, right? Okay, it might be a good ball. It might be a better ball than other balls out there and maybe more realistic to what they use in the NBA. But there's a lot of other factors involved in whether or not you get into the NBA, including how good other people are. And you can get tools. You might have some workout program or some particular exercise that you're using that not everybody else uses that gives you an advantage, that helps you, but it's only one factor in a slew of other factors about whether you're actually going to get into the NBA, right? So you can't come, it would be deceptive marketing for somebody to come in and say, this one exercise is going to get you into the NBA. Just like it's false advertising to come in and say, this one indicator is going to make you a profitable trader. There's so many other things involved. And most of the people that do have success have it not because they had a real edge, but because they're lucky. And then I would go further to say that for every person that is successful because of an edge, there was probably 10 other people that were trying to use the same edge and failed. You can see that very clearly in momentum funds, that there were tons of momentum funds, many more momentum funds than the ones that we have today, that all failed just simply because they like started at the wrong time. Like you happen to start your fund in a year where it was bad, and then you don't survive because it's like the first 2 years of your fund or something like that, right? There's probably a lot of funds that were really good and maybe even more advanced than the ones that survived. There might have been a Renaissance Capital out there, another Renaissance Capital out there that we never hear about because they didn't survive, right? The only chart I use is the delta. Well, one of the indicators that we have in there is a delta chart. And in fact, I have a more advanced delta chart. I have 2 more advanced delta charts. So one of them is just your regular cumulative delta, but it records the data because the data that you'll get live versus tick replay differs. So this one saves what you get live, and then it is able to combine between them and cache it, and then you can do back testing with cumulative delta. So that's one of the indicators. That's the one that I probably worked on the most. Then another one that I have is an advanced cumulative delta that has a better matching algorithm. So when you're using delta, it's looking at all of these different things like the best bid, best ask to determine whether an order is a buy or a sell. The problem is that the level 2 feed and your volume feed can kind of be out of sync. So there can be situations where it categorizes something as a buy when it was actually a sell and vice versa. And then what do you do in an instrument where there's a really wide spread? There's a really wide spread and all of the trades are happening in the middle. How do you determine which one was a long or a short? That's kind of difficult to do, right? So we have a more advanced algorithm that is like 95% accurate on that matter. So if you're going to use it for stocks, especially where there's a large spread, it's like almost essential to use that particular indicator. How do you know how to calibrate your strategy when you're going back far enough? Let's say 10 years back in the past, or know when your strategy shouldn't be used when the markets aren't in play. Okay, so there are some little bits that you can do where you can look at the daily chart, information about the daily chart and the volatility of the daily to determine when to trade or not to trade. Oh yes, we're just getting the new home sales stuff, by the way. Oh, sorry, CB consumer confidence. New home sales 0.664 lower than expected. Okay, anyways, so this one is, what I'm doing here is a pretty good example of what we're doing. So like, I have back tested it over a year's time period. Oh, so we need to save history. So I'm going to back test it over a year's time period and see the performance over a year. And then if I like it, then I'm going to go and use a wider frame and say, okay, does it work over 5 years? And see the performance of it over 5 years. And see if that holds up. So if what I've been doing is I've been curve fitting, if I'm just adjusting parameters to the current market and that's what's causing it to work, and those parameters are not going to be the correct parameters going forward, then I should be able to catch that, or I'll be able to catch that most of the time by having a test data set or a fit data set and a tested data set. So I have one data set where I use that, where I kind of use the machine learning stuff to figure out what the correct parameters for it are. And then I have another period to verify that those parameters actually work outside of that data set, right? So there's all sorts of things that you can do like that. just be aware that like if all you're doing is using a single time price series like this strategy is doing, the chances of that actually working are very, very low. And I can see here in the results that we're getting from this thing that it's mostly okay, so that one was a great example of where over the past year it worked really, really well, but then when you do it over 5 years it doesn't work well at all, right? Compared to when we did Gambler 4, I think it was this one. And I think it was this one. I don't know what the difference with this one was. Oh, Saf, what's in the Discord? Well, so I have 2 Discords, by the way. So the first Discord, I wouldn't even necessarily consider it my Discord, even though I am the administrator for it. But that is just like general futures trading Discord. It is the largest futures only focused Discord, the oldest and the oldest and the largest. Certainly there's competition these days now though. Then there's a second one that is a paid $3 Discord. So for instance, if you don't want to try and grab all of the code from the screen that I've been showing you for this thing, I will be posting it over in the paid Discord. Although it's not going to work unless you have my indicators. I have a couple of instances where I'm using the indicators and I'm using my my basis strategies as well. So you'd have to have the indicator suite. But yes, it's there on the Discord. I will also post things like my Bitcoin valuation indicator. I should probably post that today. Like there's some content that I will go and I'll post in the paid Discord. But the main purpose of the paid Discord was that on the free Discord, because it's like a publicly listed Discord and everything, you just get a lot of people trying to spam you. And I have a lot of really advanced tools that are set up to ban people that are trying to do that immediately. The problem is that I'm limited because I'm not Discord, right? I was... so like I can't ban them from Discord. So the way that we got around that was we created a paid Discord. The spammers aren't willing to pay the $3 to get in. I would make it $1 if I could. But it's $3 a month. Octavia says, good morning. Yes, good morning. Yeah. I'm still debating whether I should stream tomorrow. We've had enough people here today that I feel like maybe it would be worth it tomorrow. I don't know. I got Soul at 11. Yeah. Who knows if it continues going up or not. I want to sign up for that. Yeah, I think that the link is in the video description, isn't it? Yeah. Premium $3 a month Discord. You can click on that link and sign up for that one. So with that, I tell you what, man, the performance is super sketch, but it survived all of the tests that I can do. So the next step is we start running it against SimData live, and we'll see. And if it survives for a month, then maybe we put it on a funded trader program or something. Okay, so I'm going to post version 4. let us, no, I'm just going to attach and then we'll post a picture of the performance. And there we go. So now's a good time to go back and talk about some of the indicators, all right? So I think that the real jewel of the indicator suite is the inventory cost basis. This is by far the most sophisticated and unique indicator that we have. It's not an idea that I came up with, but I haven't seen anybody else make it in a publicly available form. And this is basically trying to, it's a model that tries to model out where the market makers' positions and stops are, essentially. So they will tend to have, especially on a range bound day, they will tend to stay between these lines right here. This one where they actually came all the way up to this line is actually a little bit unusual. Usually they bounce off of this one. But you can see it worked out, and look at where they stopped almost exactly. So it seems like, you know, the funny thing is like, especially with lines, is it's always like, well, yeah, you can go and you can make a chart and you can kind of say, well, see, I can find a chart where it looks really good, right? Let me say that again. When it comes with lines, you always can, you know, find a chart where the line looks really good. But with this indicator, every time that I pull up, at least on the treasuries, you can see it bouncing off of those lines. So it seems to me that while there are definitely some limitations in that model, it's a pretty good model to have. That's the main one that we got on there, right? Then when you come back over to here, well, okay, so this is, I'm still showing the strategy tab, but here's some of my other indicators, right? So these are giving me metrics about the level 2. So again, it's not technical analysis. These are just metrics about level 2. This is showing me the overall amount of level 2 changes. By the way, I would say that like 5,000 a minute is a little bit low for the treasury. This is showing the balance between the buys and the sells. You can see that there's clearly more offers than there are bids. And you can see that when you come over to here. Well, there is that one big offer way down there, one big bid way down there. But let's see here, 3,000s. Doesn't look like it's too bad. But this says that that it is in favor of this direction, so. Oh, you know what? But this one is showing the whole book. That's why. So there must be some really, really big offers when you get up beyond where I have this DOM set up to show you. This right here tends to be really good at showing you when the market is shifted somehow. So when it crosses that 0 line, you see how like almost immediately afterwards the trend stops. So this is really good. I wouldn't use it as like this is a reversal or this is a continuation indicator, but you will get a new regime when you see it changes right there. Okay. This one, market order imbalance. This is kind of like cumulative delta, but it's turned into more of an oscillator. So it's showing you the percentage of buys over a certain window period. This can be pretty good signal where you have a strategy that we've been developing based on this, but we've been waiting for more data, seeing if getting more data can kind of improve it. The next point on this is that we need to create some indicators to help us see things like how many days left in the contract and that sort of a thing, because it seems that order flow signals shift depending on how far away the rollover is, essentially. Closer you get to rollover, the more that you want to trade against the order flow signals. That's the theory. So that's where we are with that. But we are building some algorithms off of it. This last one down here, this shows you the largest level 2 change in that time period. So down in here, there was some big players doing something. And we did see kind of a shift. You know, on a normal day, that might have been a good opportunity to go long. Today, I say it's not just because I don't think today is a good day to trade in general, but you can see that the market order imbalance went to a bit of an extreme. It almost immediately flipped around, and you got like some big orders getting involved in there. I kind of think that there was maybe some accumulation there. Of course, it was short-lived. Looks like the sellers are in charge of it again now. Can you sign up on no, you do it directly through for the Discord. It's only through Discord. We do have like Discord memberships over here, but that's mostly like, I appreciate you guys showing your support, but and we do a little bit of what I can, but it's mostly just like a thank you and not necessarily. I've been putting more of the content on the new Discord right now. Especially things like this code that we've been working on, when I can give it to you. Now, on that point, does kind of look like that chop in the S&P 500 has shifted and given way to a lot of selling in the S&P 500. And I'm surprised that this robot has not tried to take a trade because, well, maybe not, because it hasn't really gotten to it. Might have been able to do it right there, but have you run tests on candle patterns? Yes. Haven't I shown that to you before? It's been a while. I don't think that I have it on this machine. I have to go and find it here. Let's check. Anyways, I have a strategy that has all of the candlestick patterns, like literally like 50 of them or something like that. And then you can test them all and see which one works. But that was just a demonstration in data snooping fallacies. So if I take you out behind the barn and then I take a shotgun and I shoot the back of the barn a couple hundred times randomly, and then I go and I find the spot where the most bullets hit and draw a target there, and then say, okay, stand right here and I'm going to shoot this apple off of your head. Are you going to stand there? No. That's data snooping bias. And that's the problem with candlesticks. Candlesticks do kind of present an interesting setup from a statistical point of view, because they happen randomly. So a lot of the things that you'll do with, like, let's say a moving average, right? I'll get this thing where if I'm trading above or below the moving average, I want to change something in my strategy, right? And sometimes you'll get these situations where it will go back and forth across the moving average a bunch. And so you'll get periods where where the crossover happens a lot and periods where the crossover doesn't happen a lot. And in candlestick patterns, they tend to be a lot more evenly distributed from what I've seen. 18 magic blank lines. Okay. Well, I wouldn't. Oh, it's only 2 minutes. You just picked a random video. Can't even tell what he's using now. So I was gonna say I don't I feel that you are forgetting the number one thing, right? Like I'm not going to care unless there's empirical evidence. I'm already getting lots of red flags from this guy, actually. How do you find the Discord channels? So once you're in there, you should just see a couple of channels there. I don't know, it's kind of hard for me to show because, you know, I can't go in and subscribe myself and go in and walk you through the workflow, but once you have subscribed to it, you should get access, and there should be a couple of different channels. Oh, no. So what I would do is first, so I have 2 links in the video description, right? One is the free Discord and one is the paid Discord. So what I would do is I would go to the free Discord and create my account. Because to join the free Discord, I think that you have to have like a verified phone number or something like that, right? Okay. So you have the Discord account going, then you go to the paid Discord, and you know, there will be a button there to subscribe. You subscribe, you set up your payment information, everything, and then it should give you access to the Discord app. Is how it works. So I don't know what you've done and haven't done, so I can't. You'd have to maybe you can show me a screen. Well, except for that you're not on Discord. That's the other thing, is like you send me messages with you can post pictures in Discord. So if you're having a problem, you can just send me a picture of what it looks like, and I've been pretty good at knowing what's wrong. I haven't had anybody with trouble getting into it so far. So. Largest gold deposit in the world, worth $83 billion, found in China. Oh, that's probably not good for gold. Oh, you were going to search for a friend or chat. No. Yeah, that's why we have the links, so you can find it easy. And I don't think that the paid Discord will show up in searches like that. So. Oh, I missed it. Ross said that he sees them now. Thank you very much. What was I talking about before that? Well, I was talking about the indicators, but I showed you the indicators, right? So we're going to be increasing the price of the indicators because $100 before super cheap, right? And we want to grow it so that we can eventually build our own platform. So we need to increase the price to be more in line with the rest of the market so that we can put more money into the marketing of the thing. So I'm basically saying if you've ever thought about buying it, you should do it this week. I'm delaying it just to make sure that everybody that's been here and a long time viewer and everything and uses NinjaTrader has the opportunity to get it. Nordstrom family to take company private in $6.25 billion deal. That's interesting. I really have a lot of ideas on a platform, but we need more resources before we start a platform. On that point, I think that we'll probably spend the rest of this session doing researching about Rust here. I've been learning the language more. I think I need to get all the way to like chapter 10. Traits and lifetimes, because traits and lifetimes are the features that I'm always hearing people having issues with. So I got to do the full read through, completely understand them. And then once I'm done reading this, I'm not quite sure what I'll do with it. Perhaps I'll make a web app with it. I think that making a web app in Rust might be, because, like most stuff these days is done with web apps. And maybe like a game or something like that, Do you ever look at rollover gaps and futures contracts as key levels? So I have on occasion looked at charts like that when I know that a large gap occurred recently. There really does seem to be a tendency for them to fill those gaps in. Although I don't really think that you can use that as the basis for a trade in the day trading, because like you don't know when the gap is going to fill or how long it's going to take. So, but there does seem to be a tendency for them to fill most of the time, and I've done a little bit of statistics on that. Again, there's kind of this whole thing that's like, okay, so you've done all of this stuff to create some sort of a level. Why do we think that level is important? This is the struggle that I have with the inventory cost basis. I mean, come on. It's just so clear sometimes. Every day it does things like this. There's got to be something to it. But how do I prove that? I don't know how to prove that. Like there's got to be some statistical sort of test that we can do to judge the efficacy of a line, And I don't know what it is. I don't know if there's any kind of public information that would give me an idea about how to approach that sort of a question. So we have, because of the way that it's constructed, we have some reason to think, right? Because what are we doing? Well, we're looking at where limit orders were filled and looking at the average price for those people that were filled on the bid versus those people that were filled on the offer. And then we're looking at, for those people, where would they have been able to take profits at? And based on that, that's how we set those levels, right? So that's how we're calculating it. So we think that the market will react to those levels because that's like the market maker's average position. So like if the market is really, really trending one direction and there needs to be a rebalancing, then you should expect to see it come back to that market maker's average price. They'll rebalance their books, right? That's why we think that it works. But that's all based on like logic, right? I don't know how to generate empirical evidence for a line. I can generate empirical evidence for a setup. I can generate empirical evidence for statistics on certain phenomenons. But I don't know how to do it for, is this line actually matter? You know, this is the thing that frustrates me, is that the best indicator that we've got, the one that appears to be like the most valuable, does not have empirical evidence for it. But I have, a bunch of other things that I can show. Like, it touches those lines every day. Anyways. Add TPO as... I think I was kind of done reading this particular one. There's a couple of things in Rust. One of the things I've noticed is that the person that wrote Rust just seems to hate verbose syntax. So there's all these little tricks in there and everything to make the code more dense and clean looking. This particular one, though, I like. I don't have to worry about whether I'm using a pointer or a reference. I call methods on them the same. That was the thing that always drove me nuts in C++. Kind of interesting. They have the ways to add what they call methods to structs. But I'm like, at that point, why don't you just call it a class? No, I don't know. Whatever. enums and pattern matching. Ooh, option, which expresses a value can either be something or nothing. I like that. Okay. Okay, their enums are a little bit more advanced than typical enum even. So here you have an enum, but it's not like, okay, it's an enum and there's a string of different, no, there's like different class type for each option. Oh, wow. And they can even have different amounts of data. Wow. So I don't have to say, if it's type this, then you use this constructor and here are the variables. And if it's type this, then you use this constructor and these are the variables. You just specify the enum with the type and variables in it, and then it just immediately pops them in. Can you do that in other languages? I've never done something like that before. I could see that being really useful in a lot of web development because you get option fields like that. And you can create associated methods for enums. Love it. Hmm. So they define an enum, and you can say it's either none or some of this thing. Oh, so all variables you can do that with, and it's pulled in automatically. In order to have a value that can be null, you must explicitly opt in by making the type of that value an option T. Then when you use that value, you're required to explicitly handle the case when the value is null. Everywhere that has a value has a type that isn't an option T, you can safely assume that the value isn't null. This is a deliberate design decision for Rusts to limit null pervasiveness and increase the safety of Rust code. Lovely. Here's another example of where it's like, oh, this is too long, so we made this little thing so that you can get rid of that extra line of code. That's a good place to stop. Now I want to pop in here. Let's make new. I think that I should do this one. How much do you need to day trade? I want to do how big should your stop be, but I think that we need to do a little bit more work on that one because I think that there's a couple of other possible back tests I can build up and show for that. So, like, I haven't tried a trailing stop. That'd be one to try. I think it should be like this. I think it should be January. And then let's try and do 2 indicator videos. There we go. Next 2 months of videos sorted out. So we'll do, I want to have one that's like something that I think that people would be really interested in a video that will like garner a lot of attention, sort of a thing. And then one that is the stuff that I actually want to talk about that people maybe don't necessarily want, but that I think will be the most valuable to them, right? And so I'm going to do how much do you need to day trade? And number 2, how to trade without price. And then we want to make some videos about the indicators. So make one about the inventory cost basis and spreads. Those are probably my two favorite, I guess. Make videos about those. Should probably make a couple of videos about spreads because I think that this channel could possibly be the best resource for spread trading. I don't really see a whole lot of other people talking about it. I think that should be good. And then today, I'll do this over here. Applications. Clean. Edit interview video. Right. Okay. I think that all looks good. I don't want to not do any work today and go skiing. Let's see what the skiing's like. No snow overnight, huh? Okay. I don't remember though. Do I have? I think I have blackout dates. December 23rd to January 3rd. Oh, so starting today. So third of the next 2 weeks. Can't go. Okay. But it does look like it's going to snow, so when we come back in January, it probably should be better. Last time it went, it wasn't very good. Snow wasn't very good. I feel like 4 things is not enough, but it probably will be enough. We'll see. We'll see how far I get. All right, guys. I think that's good enough for today. I don't know. We'll see if I'm here tomorrow or not. How did we do today? There's probably not a whole lot watching anymore, right? Oh, 7. That's not bad. It was a quieter day though. I maybe I'll stream tomorrow. We'll see. I guess I'll kind of look at how the market goes for the rest of the day and everything. But if I'm not seeing you tomorrow, right, then I'll see you on January 2nd. So a Thursday. And I'll be doing lots of work in the meantime. So I might have some interesting things to show you by then. We'll see. Thanks for sticking around, D. Okay, I will see you guys next year. Stay excellent.